everyone, welcome back to the channel. This is going to be a video explaining the 9am CR model, and I haven't posted a video like this in a pretty long time, if I'm going to be honest, and I think it's just good to refresh everybody's mind just how powerful this model actually is. And you know, you'll see the model form almost every single day. Now, it doesn't mean you'll catch an execution every single day, but it is there in front of you. Sometimes it's just a little bit too quick to catch. Other times you're missing some key confirmations. But that being said, I want to run some back tests, or at least with the replay function on TradingView with you guys, just to show everyone the powers of this model. And this is the 9am CR model created by me based on CRT and liquidity. Okay, so we'll start off with Thursday, July 10th, right over here. This is the 8am candlestick high and low, and that would be step one of the entire model. We're going to mark this down here. Step one being finding the 8am high and low, and this comes from the hourly time frame. So you're going to want to find the 8am high and low after that 8am candle closes on the hourly time frame, and you want one end of that range to be swept, and you want to target the opposing end of that range. That being said, I see a lot of people using CRT as the entry technique and then targeting lower liquidity levels, which is absolutely fine. I'm just going to be breaking down the 9am CR model for what it is, and that's when we target the opposing end of the 8am candle. Step number two, of course, would be waiting for a lower time frame CRT coming from the 5-minute or 15-minute time frame. So that is step number two for a lower time frame confirmation. And of course, step number three, looking for that displacement. We're just going to mark this down. Step three is looking for the displacement, and that can be a fair value gap, an IFEG, a change in state, a market structure shift, etc., etc. We're just going to leave it as is right over here and move this up just a little bit. So right over here, you can see we have the 8am high and low. We're actually going to rewind the chart just to show you everything live in action. All right, so I went ahead, for some clarity, I went ahead and drew out the 8am highs and lows for every single day, and we're going to be breaking down as much as we possibly can here. But just for this quickness and speed of the video, I went ahead and automatically drew the 8am high and low there. All right, so let's rewind the chart here up until that 8am hour and the 9am open. First off, before we even move forward, I want to point something out. We're above, so this is how you look at liquidity. The 18 o'clock open right there. We're now above an hourly swing point right over here. So this becomes what could be used as a key level. And then of course, if you hop up to a 4-hour time frame, you would try to locate a 4-hour key level. Do we have one? Yes, we do. I'm just going to go ahead and turn this off. This 1-hour swing high is also a 4-hour swing high, meaning this is a 4-hour key level as well. So we'll mark this out as our 4-hour key level, keeping in mind that you would only need an hourly key level at certain points. And if we drop down to the 15-minute time frame, you'll notice it's a 15-minute swing point as well, which could have also been used as your reference point. Of course, it's also within this 15-minute fair value gap right there. Okay, we're just going to remove that to simplify the chart. So step one would be locating that 8am high and low, which is right over here. We'll mark this out. 8am, that's the 8am high, and then we got the 8am low right over here, and the 4-hour key level. We're now waiting for one end of this 8am range to be swept, and we're also looking for a 15-minute CRT while that sweep of either the high or low is happening. Okay, so since we're in the 15-minute time frame here, we're just going to drop down to the 1 minute, and I'll keep you guys basically updated here on how you can anticipate the 15-minute CRTs forming. What you'll notice is we took out this high right there, started expanding lower. However, right now we are starting to reject lows, and we rejected this higher time frame low, and then a 1-minute low starting to be rejected right at about the 9am open. So it's kind of easy to say that we might target more highs, specifically the 8am high, to then come lower if we get the setup to form. So we're just going to advance this chart here, and right now we're just waiting for one end of this 8am range to be swept. And I'll show you what that looks like here. Let's advance the chart. We don't really care what's happening mid-range. If price reverses and we miss a setup, it is what it is. I'm waiting for one end of the 8am 1-hour candlestick range to be swept here, and a 15-minute CRT at the same time. So what you notice here is we're now above the 8am high, and we're actually going above this swing point as well, which could be used as a reference point, just buy-side liquidity in general, right? So the 8am low is right beneath the buy-side liquidity, and the 8am high is right beneath buy-side liquidity, and it gives you the mechanical approach that CRT gives, right? So now we're looking for that 15-minute CRT. The time is now 9:28. This 15-minute candle is going to close at 9:29. So right after 9:29, 9:30, we're just going to go ahead and draw the 9:15 candlestick low, which is right over here. So this means this is the 15-minute CRT.
Si tienes un cliente que compró acciones a 8 y ahora se venden a 16, el cabrón se pone contento.
Low. And then the 15-minute CRT high would be in the next couple of minutes. We got the 9:29 candle forming right there, and that is the 15-minute CRT high. Unfortunately, the previous 15-minute candlestick high would have been right over here. So we got 9 a.m. up until 9:15. We got the 15-minute CRT high right there, and then the 15-minute CRT low. We never closed below it, so there is no 15-minute CRT. So we can ignore that, and now we're focusing on this 15-minute CRT high and this 15-minute CRT low. Do we have a potential 5-minute CRT forming as well? And we almost got the closure below right there. We're just going to locate and see if we get a some type of displacement back down, and that would confirm the CRT, even though we got a slight close above. So we're going to wait on the 1 minute time frame, and we'll mark this out as the 5-minute CRT. and the 5-minute CRT low as well. We're just going to go ahead and remove this buy-side liquidity to simplify the chart. You got the 8am high right there, which we will thicken up, and then the 8am low right there, which we will also thicken up, and then the 15-minute CRT, 15-minute CRT, and then the 5-minute CRT right there, which we will use a dashed line for, as it's not as prominent as a 15-minute CRT. So 9:30 market open happening right about here. We take out the 15-minute CRT high. We can now ignore the 5-minute CRT, and we're looking for an order block, IFEG, or fair value gap formation, maybe even a market structure shift to help us gauge if price truly wants to reverse and target the 8am lows, which would be your final TP, right? We got the key level there. Everything is here. And finally, step number. Let's try to find the drawings. Okay, I lost them. The next step basically is looking for that displacement, like I mentioned before. Okay, so let's just get set up here. All right. So let's see what happens in the next candlestick. We actually close beneath this candle, and this becomes your bearish order block. And at this point in time, you're looking for sells. This would be the order block to go short. And from this point forward, you can either wait for a retest of that order block or enter this short, targeting the opposing end of this range. So the idea being that price should target this level right there. Okay, now let's see if the analysis works out. Let's see if the 9am CR model allows us to actually catch this. We never get to tap into the order block, so there's not going to be an entry there other than a validation. Let's see if we get the retest back to the upside. No, we do not. Instead, we end up filling the entire 8am range right there. And we will see if something else happens here at the lows. So right now, it looks like we formed an order block right there, and we formed an IFEG. Now, the only thing here would be we need to validate that with an hourly key level. Okay, so on the hourly or 15-minute time frame, we would want to see if there's any type of key level that we're getting the reaction off of there. We got the swing low that we'll pay attention to right over there, and we need to see if we tapped into it at that point in time, which we did not. So this means that the down move is still not over, and we still got sell-side liquidity to come tap into. So this is not an entry to go long. If we get the deeper retracement up to the order block, that would be the entry to go short. If not, then price would just expand lower. Let's go ahead and advance this. You can see the turtle soup happening there. Looks like we're just going to expand down over here. And that's exactly what happens. So in this example, we don't have an entry off of the order block. However, the idea, as soon as we close beneath that order block and turtle soup, the 8am high is there. And that's exactly what happened. Price ended up targeting the lows. Okay, so that finalizes this entire day of the 9am CR model. We're going to go ahead and advance the chart up until the next day session. Okay, let's go ahead and advance this. And we have so let's do this. We have the 8am high and low right over here drawn out. Let's mark this out. 8am high, and we will do that. And the 8am low right over here. And now we are looking for an hourly key level that we can use, or a 4-hour key level as well. Do you see anything? Yes, I do. So I see this fair value gap right there that we might want to tap into the highs of. And then as for the lows, we're already turtle souping these equal lows right there, relative equal lows. So that key level tap already had happened. And then we have this order block that looks like it's about to form if this 9am candle can close above it. Besides that, I don't really see much. So we will drop down to a 15-minute time frame and see if we have any type of levels beneath us. We do not. We just have a 15-minute swing point right there. So we'll just hop down to the 1-minute time frame and try to locate a 15-minute CRT while turtle soup in the 8am high and low right over here. This being the hourly fair value gap, bearish fair value gap right there. All right, let's go ahead and advance the chart. So right now we still don't care what's happening in the middle of the range. We're waiting for one end of this 8am candle to be swept. Still nothing. And finally, we end up targeting the highs here inside of the hourly fair value gap. And we're actually above these highs as well. And we got a bunch of liquidity resting here. So all of these highs being liquidity. Let's see if we can actually tap into that and potentially catch a reversal. It's now 9:31. So this might be the accumulation, the manipulation and distribution back to the downside. Let's see if that happens here. And if we get a potential entry, do we have a 15-minute CRT forming? We would need to use the 9:15 to 9:30 high. So the 9:15 low being right there. And then the 9:29 high being right over here. Okay, so this would be the 15-minute CRT. And then this also being that 15-minute CRT right there. We're now waiting for a potential entry. Right now it looks like the fair value gap is being respected. And this order block is just way too big for us to use. So let's see what happens here. We might get another leg up. All right, instead price ends up expanding down. We turtle soup the 8am highs. It looks like we might come down to the 8am lows. And then we could potentially come back to the upside. We'll see what happens here. We end up hitting those 8am lows, which is interesting. We have the swing point right there that we can use as sell-side liquidity. And let's see what happens if we get that reversal. We're going to need to locate another 15-minute CRT, unless this candle can close above that previous candle, so the 9:15 to 9:30 candle. And that would mean that this is a validated CRT if we do get that. And this is the 9:43 candle. We need the candle to close above the range, 9:44. And we actually don't close above. But we end up turtle souping this next candlestick's low. So this would be the 15-minute CRT low right there, and then the 15-minute CRT high being right over there. So let's go ahead and mark this out. 15-minute CRT and 15 minutes CRT right there. This would be the order block if we get the closure above. Let's see if we do get that. So we do get the closure above that order block, and that confirms and validates it. And you can find the entry right about here since we are not far from it. So the entry would look something like this. Going long right about that point, targeting the 15-minute CRT high or that 8 AM high right there, and then putting your stop loss right at those lows. This gives you a nice 2.26 R to R. You're targeting that CRT high right there. And let's see if the entry actually ends up working out here. We target the order block. We finally hit into it right there with that 947 wick. We completely inverse this fair value gap, so that's ideal, an ideal scenario. TP1 would have been hit at the 8 AM highs right there. And then let's see if final TP at the 15-minute CRT high gets hit, or if it wants to use this as a rejection block right there. And it looks like we hit the highs right there. That would have given you a beautiful 66-point move. And this was on Friday, July 11th. So pretty decent day there. We missed the shorts because first off, the R was absolutely awful, and we never got to tap into the order block as well. However, we did catch the longs off of the reversal at those 8 AM lows, targeting the 8 AM highs, and then of course the 15-minute CRT high as well, and final buy side liquidity, which is those equal highs. Let's see if that is hit, which it should be, and we actually create another set of equal highs right there. Let's just look up basic market structure. It looks like we're going to turtle soup some lows to then come higher. Is that the case here? And that is exactly what happened. All right, so that's the breakdown of this next session. So far, so good. The 8 AM, 9 AM CR model and the 8 AM 1 hour candle gives us a good reference point on how to gauge price action and where it'll actually go. We're going to break down one more. So heading over to the 1 hour time frame, we're going to go to the next day and show you exactly what happens here as well. So there you go. We have the 8 AM candlestick high and low right over here. We're going to just mark this out and make it a thick line as well. Alright, so now we're on the 1 hour time frame. Let's try to locate some type of key level here beneath or above us. We have some equal lows here that are they're sticking out to me. So we got a level right there. We do have a swing high right over here that can be used as your key level as well. And we have this huge daily opening gap that we're within, so that can also be used as a key level. Of course, we have the order block here, and we have the fair value gap right there as well. But we'll just pay attention to these lows and that high right there. Let's drop down to a 1 minute time frame and try to locate a 15-minute CRT. As you guys can see, this is the range that I drew with the 1 hour high and the 1 hour low. It's a perfect range, and you can see we are sweeping the range high, and we might end up going towards that 8 AM low to go for another sweep, and we can try to look for longs at a certain point there. So of course we're going to need to wait for a 15-minute CRT to validate that, or a 5-minute CRT, and then we're going to execute longs or shorts if we see that opportunity form. Let's see what happens here. We don't really care what happens in the middle of this range, and we'll just wait. Looks like we're going towards those highs. However, we did not turtle soup that. We created some equal highs. Looks like we're going to go towards there, and that's exactly what happens here. Currently just about 924 right before market open. We're just going to go ahead and draw the 915 candlestick low, which would be right over here. This is the potential CRT, 15-minute CRT. And then we'll wait for 930 market open, so 926 right there. We're just expanding higher here. And actually the goal here would be to find some type of liquidity. And do we have any? Yes, we do. So we have these equal highs, and I mean, they're not really that important, to be quite fair, because we are inside of the daily opening gap, and I would use the daily opening gap high as the key level, which would be right over there. So, or sorry, right there. So we're going to remove those 1 minute equal highs, and we're going to use the high of the volume, or sorry, the new day opening gap as the key level and as our point of liquidity or point of reference, whatever you want to call it. Right there, we got the 8 AM high and low. We got the key level right above us. Let's see what happens here. We're on the 1 minute time frame, currently 927, and at 929 we form the high right there. So this is the 15-minute CRT high, and we'll use this as our 15-minute CRT range. Let's mark this out. We might also have a 5-minute CRT form, but we'll see what happens here. So we take out the 15-minute CRT high, we tap above those equal highs, we're tapping above the daily new opening gap, and now we need to see a potential reversal back to the downside with confirmations. So let's see what happens here if we actually get that. We actually have a huge wick right there, and this is a good hint as to it's basically a hint explaining to you that prices turtle soup and highs, and this is a stop hunt, and we're probably going to head towards the opposite direction here. So let's see if that actually happens. And do we have any liquidity below us? Yes, we do. We got quite a lot of liquidity right there. Let's see what happens here. If we get the closure beneath that order block or not. Nothing just yet. Nothing just yet either. We are respecting that rejection wick, which is nice to see. However, we finally confirm the short right over here. We actually did not close beneath that, so...
Si quieres aprender Python para tener una carrera en ciencia de datos, TI o ingeniería, tienes que hacer el curso.
Interestingly enough, that's not an order block just yet. However, we did close beneath the body. Let's see what happens next. We still don't close beneath that level, so I'm still not confident. However, we just formed a fair value gap, and that could be used as your entry to go short. So let's see what happens there. We tap into the fair value gap. We tap into that rejection wick as well. You could be entering short right around here. So let's just say, for example, you caught a short at the midpoint of that fair value gap, stop loss at the highs right there, or the midpoint of the rejection block, and then targeting the lows right there. And let's see, or you could even target liquidity beneath. So that would look like that. And then, of course, going short. So let's see what happens here. Price ends up respecting the fair value gap, respecting the rejection wick right there, respecting the 15-minute CRT, respecting that key level as well. We're now going towards TPs right over here, and price is moving our direction. TP1 would have been hit at those 15-minute or 8 AM lows, and then finally, final TP at the liquidity level right there. So this is a perfect example of how the trade should work out. Also, another thing to point out, if you don't like the fair value gap right there, and price closed above it, you can always wait for this to form your order block right over there, which we do get the closure below right there. We get the entry to go short right over here, and the stop loss would go there, targeting those lows. So that would look something like that, giving you a nice 2.82 R to R with a 71.25 point take profit, and profit being hit in 1, 2, 3, 4, about 5 minutes or so. So that's the breakdown of the 9 AM CR model. As you guys can see, it is so simple. A mechanical approach to the market. You're still using buy side and sell side liquidity. However, using the 8 AM range to gauge where and when price should reverse is important as well, and using it as targets. So that's exactly what happens here. And I hope you guys really enjoyed this video. If you do have any questions, reach out in the comments. I'm here to answer every single question possible, and I will catch you all in the next few videos. Bye-bye.